Hi, today I'm going to give a market outlook, especially because all three countries that I mentioned in my previous video, so you have to go and look at my previous video, which are the countries that we have been focusing on or have been investing, which would namely India, Japan, and China are now in focus. And so today we're going to talk about what we think should be invested in going forward. So obviously, people would have made a lot of money if they had followed my advice. And please refer to the previous video. And so one of the biggest markets that we are in, which is also our largest exposure in the ASV fund, is Japan. So see, I have a Japan keyboard. Yeah. So Japan's interesting because if you look at the index, it has been going up a lot, but most of the rally have been driven by names that my 13-year-old niece would know, like names like Tokyo Electron, Fast Retailing, names that people would know, right? Because those are the stocks that people would first invest in when they want to enter into the Japanese market if they're not familiar with Japan. So number of funds actually, if they are not in those names that have gone up a lot, like that's the 7 or so names that have gone up, then they actually didn't perform as well. So we think the Japan market still has room to go up, just because the rest of the market has not caught up with the index rise yet. Of course, the strategy that we have been focusing on since last year, last year and then beginning of this year, and we're still very constructive on it, has been the activism strategy, because there continues to be corporate governance reforms, reduction in cross shareholdings, it first started with like price to book less than 1, and the regulators and the exchanges keep on pushing people to say like, hey, you have to do something, you have to do something. So we remain very constructive on the strategy. Japan rates is another strategy that we have made money in this year and remain positive on, just because in the past, when Japan was negative rates, then clearly there's nothing that can be done, right? So now that Japan's rates are climbing up, even though it's coming from a very, very low base, it's still a big increase in terms of percentages. So we think that given that there are not that many people trading Japan yet, because of course there are people saying that, okay, if the strategy is positive or returning outsized returns, then there should be a lot of people trading it, which would then mean that returns come down. But as I have shared in my previous LinkedIn posts, there's a whole generation of Japanese traders that have decided to exit the market because there was like nothing much that could be done in Japan, especially in the fixed income side, for a number of years. So we remain very positive in Japan. It will likely remain our largest single country exposure. Now, next, we'll talk about India. So India has had a really good ride up in terms of the index, which means that if you just long India, you have made money this year, likely. But then, as I had said in my previous video, in the beginning of the year, we're not playing that game because we're thinking that, okay, there's a bit of froth, there's a bit of overvaluation, maybe things might come down a little bit. So we had spent quite a lot of time being on the ground in India. We have a small office now, and there are some goods from India that we got back. I think we have some Indian nuts as well. Yeah. So we try to understand what is the sentiment on the ground as well. So we're a bit different from possibly some other funds which have a very broad and remote view of the region, right? So we agree with most people that it's a multi-year game, right? India. So you look out the 10 years, it has a very good demographic space, young people, middle class growth, that sort of thing. But then we are kind of at the tail end of a 2-year great growth cycle, and so if you had look at the fund flows, you'd see like there's been money coming out of India. Companies have been missing estimates, so there are quite a lot of companies actually at 30% or more from their all-time high, and it's not, it's, you know, I guess it's not a time where we would say like, okay, let me go into India on a single stock picking basis. But it doesn't really affect us. Like, so we have been in options market neutral trading for quite a while. And of course, there are new changes in regulations, which people have been saying that, okay, maybe it will lead to a drop in volume. You know, maybe the regulators are going to do more to prevent retailers who couldn't afford it to buy options. But as we have analyzed in quite a few of my posts, we don't think the impact will be such that it will cause our strategy to not work. In fact, we have observed that it might have driven away some players who are less skillful at this strategy. So we remain very constructive on India as well for market neutral options. For single name exposure, maybe not so sure. Yeah. So on China, so we have been out of China since the start of common prosperity, but then this year we have seen, especially the past 2 months, we have seen a change in direction of what the government has been doing, which is like, you know, I guess like tightening fiscal and monetary policy and giving some pressures to companies to you know, create more jobs at the expense of profitability. We have, of course, the market has so far been a little bit disappointed with the size of the stimulus, but then people forget that it is still signifying a change in direction, and so that's what we had wanted to see, right? So we had wanted the government to finally try to say that, okay, you know, I believe the market, I want the market to be good, right? Because if you think about it, the property market is not that easy to fix, and it has been one of the key drivers for growth. And if people don't feel rich, they're not going to spend. If the property market is not going to recover that soon, then you need another form of, you know, another avenues for people to make money. And we have seen a very significant and positive change in the stock market. So, you know, just a couple of months back in September, the trading volume dropped to, in Asia, has dropped to the 5,000, 6,000 level, which was really low. And now it has been consistently above 10,000. So, you know, if you think about it, the stock market it can only be healthy, or like you can only make trading profits if there is volume and volatility, right? If no one's trading, then you can't really make money from the stock market. So if we think about how, okay, so the stock market went up and then it has, you know, corrected somewhat, but if the trading volume is still there, that means people still believe in the stock market, and that's where there could be opportunities. But I mean, are we playing like, you know, specific stock picking or trying to guess what the regulators are going to do? No. We think that it's still going to be some impact from, I guess, like potential Trump tariffs. We don't think that there's going to be a blanket application of this 60% tariffs, but that could definitely would be impact on companies which export. But if you look at the percentage of exports to US from China, I believe it is around 15% or so. So it's not going to decimate the Chinese economy. There might be some impact, but I think a lot of people are saying that China is very, very cheap now, especially in comparison with India. So there might be some shifts along the way that we're not going to try to fight, and then we're going to observe what would happen. But we still remain quite constructive on the, you know, potential change. And in a very in the best case scenario, there could be kind of like a, you know, China version of quantitative easing, then which would lead us to further change our strategic allocation. So yeah, so this is how we view the market, and we also think that we have kind of the full set of information, just because I speak both Mandarin and Japanese, and I feel that like a lot of the information that I've been getting it's in the local languages, especially what the regulators are saying. So that's another advantage that we have. So take with a grain of salt, like whether this would make money going forward. But given my track record with that one video, it's pretty good. All right, great. Thanks, everybody.